Nvidia and the Nasdaq hit new highs. I'm Lisa Bernhard with Reuters, and joining me today is Kevin Mon of Hennion & Walsh Asset Management. Kevin, the Nasdaq crossed 17,000 for the first time today, and shares of AI chip leader Nvidia also hit another record high. The 10-for-1 stock split has not yet happened with this company. Shares are roughly $1,150 a piece right now. What is driving this stock to new heights yet again?
Yes, Nvidia has certainly been the poster child of the AI boom thus far. And I would argue that artificial intelligence overall has been the tail wagging the stock market dog for the better part of the last 18 months. What we learned last week from Nvidia only accelerates the pace of the interest in artificial intelligence investment opportunities. Nvidia, of course, once again knocked the cover off the ball with respect to earnings and revenues. However, what I found most interesting from their earnings report last week wasn't necessarily just the growth in their chips platform, wasn't necessarily the forecast with respect to their next generation chip platform, that of course being Blackwell, but rather the growth of their data center business, a 400% year-over-year revenue growth as it relates to data centers. That's where the puck is going right now. That's where the investment dollars are heading, and that's what Nvidia is capitalizing upon.
With these data centers, is Nvidia, like Apple, trying to create its own ecosystem?
I do believe that Nvidia is trying to create their own ecosystem as it relates to AI, very similar to what Amazon did in the world of e-commerce, initially starting out as an online commerce merchant, but then looking to get into their own warehouses and distribution centers and their own actual delivery systems. That's what Nvidia is trying to do right now. They have the chips, check that box off. Now they're looking to also invest massively in their data center business and provide a holistic AI solutions as opposed to the chips component.
So let's now turn and talk about Apple, which has been a laggard this year in terms of tech stocks. The stock is up a hair right now due to data that came out today that showed that iPhone sales in China are actually picking up. So do you think that this stock can rebound? And what is the key to its success? Is it iPhone sales? Is it services and the ecosystem? Is it AI? Is it all of the above?
It really is all the above. And Apple did benefit from the wave of Magnificent Seven performance in 2023, but they are lagging this year. Them, as well as Tesla, are clearly the two biggest laggards of those Magnificent Seven. Although I think it's fair to say that we're now getting down to the Magnificent One with respect to Nvidia. But I digress. As we jump back into Apple, I think we need to see the next generation of innovation from Apple, whether it's respect to their actual cell phones or their investments in AI. I expect to see a lot more CapEx spending coming from Apple as it relates to artificial intelligence, which should benefit them down the road. But I don't anticipate any significant price performance over the short term while they're making those types of investments in their business.
All right, let's go to some macroeconomic data that was out today. Consumer confidence, which was up unexpectedly after being down for 3 straight months, although consumers still see rates being higher for longer and think that we're possibly going to slip into a recession over the next 12 months at some point. So what are they so confident about?
Consumer confidence is incredibly important because the consumer accounts for 70% of our economic growth here in the United States. So I follow consumer confidence data very closely. And I became very concerned when the April data came out and showed that consumer confidence in April fell to 97, which marked its lowest month going all the way back to July of 2022. But now in May, it's rebounded back up to 102, reversing that decline of 3 consecutive months, as you correctly point out, and representing perhaps some optimism for the U.S. consumer. I don't see what they're as optimistic about, though. Inflation remains sticky. Their own outlook for a recession remains. And as we can see, unemployment actually rose last month to 3.9%. So the fact that they are more optimistic than last month, I guess, is a positive thing, of course, but they're still less optimistic than they were 2 months ago. So I'll continue to watch this data going forward. But at this point in time, we need the consumer to continue to spend for the economy to continue to grow. And I think the consumer is starting to run out of steam.